Thank you very, very much. And thanks a lot, MFC, for arranging this panel. It's about diversity of the trends, diversity of investors, diversity of impact. Where should we start? And what should we discuss about? But before that, let's do a very quick round the table. Who is who and what's the institution we are representing? Please, only 1-2 minutes, not more than that. I know it's a challenge, but let's try to stick to it. Starting with me, I'm Cristina Dumitrescu from European Investment Fund, traditional implementing partner of the European Commission on deploying the European programs for microfinance and social entrepreneurship finance.
Thank you, Cristina. Good morning, everybody. I'm Mera Juzbašić-Bajgorić. I'm Regional Director at Finance in Motion, quite well-known name in the microfinance world, similarly to the representatives of the institutions that we have today in this panel. Finance in Motion is impact asset advisor and manager of currently 7 funds in our portfolio. The funds that are relevant for microfinance are European Fund for Southeast Europe, which many of you know very well, and also Green for Growth, also known in microfinance world, which is focusing on renewable energy efficiency, while EFSE is mainly about S component of the ESG, meaning social impact. Andre was talking about SDGs and connection to ESG, and I'm quite proud to highlight that Finance in Motion is tackling 13th out of 17th SDGs, possible with variety of funds that we have in our portfolio. And yeah, today the trend that I would want to mention just 1 second, it is exactly on what Andre was talking about, and it is about sustainability, ESG, and sustainable business models. So thanks, Cristina.
Hello, everyone. My name is Nina Pataraya, and I'm Senior Investment Officer from Blue Orchard Finance. I think a lot of you know this name already, as Blue Orchard is also impact asset manager, and its largest fund, Blue Orchard Microfinance Fund, was one of the first and currently largest microfinance and impact funds out there. And so Blue Orchard is also managing up to 10 funds, many of them thematic, including impact objectives like women empowerment, green finance, climate change, ensure resilience, and so forth. So yeah, it's 2 minutes, right?
Hi everyone, my name is Benoît Bouès. I'm head for financial inclusion, debt at responsibility. Just in a nutshell, responsibility is an impact manager that most of you know, active in the market for 20 years. As of today, we manage USD 5 billion. Most of you know the financial inclusion debt, but we do as well agriculture, energy, we do as well equity in those different topics. So this is starting from financial inclusion, we developed 2 other topics. I think this is something we're going to touch during the session today. Also, the new trends and the new investment thesis there is in the market. If we speak specifically about the region, we have a portfolio of debt of roughly 800 million. Most of it is with financial institutions, but some is also dedicated to renewable energy and energy efficiency projects. Myself, I'm based out of Paris. My team that is present today, and most of you know as well, is based in Tbilisi. 7 very nice investment officers that you can reach out to, and to me as well if you have any questions also after the session. One thing I wanted to say also is I wanted to thank the MFC for organizing. I think last year we celebrated 25th anniversary. This is a very stable event in the calendar. We all meet for a long time now at this conference, and that's a good point to see the new trends that we will also focus on during the session with colleagues here. Thank you.
Hello, everybody. Do you hear me? Yeah. I'm Michał Radziwiłł. I am an investment manager in Impulse Investment Manager, the company. It's a Belgian company. I see it says here I represent Poland and Belgium. I'm used to represent usually Belgium, so I'm happy to say that I'm Polish. I live in Poland, and we are in Poland now. So I work from Poland. I used to manage also some funds financing social economy in Poland at some point. And Impulse is a impact fund manager. This Article 9, which was mentioned here. Our funds active in the Central Eastern European region are Impact EU and Helenos. We don't manage billions of dollars. We are stopping at millions. So we are. This is one of the diversities that we can mention here. So I'm very happy to be here with you.
Thank you so much. Thank you so much. And I have to be very honest and say that I am really privileged to share the stage with such exquisite professionals in the microfinance and impact investment business. So we have prepared for this session, but let's be honest, there are some trends that were mentioned here yesterday, and I took note about what Sebastian Duque from Mirova was saying about the reticence of investors in investing in microfinance or in emerging markets. And I took note of what Andrei was saying this morning about the ESG reporting, about regulation. So this risk-averse behavior from investors comes from, I don't know, interest rates environments, comes from diverse regulation, not clearly who regulates what and why. Nino, what would be your ideas on this topic?
So first of all, indeed, you mentioned interest rate environment, and I think we indeed find ourselves in this not so pleasant trend right now, but maybe looking back and assessing the situation retrospectively, we can also say that maybe it was expected given that it's post-COVID period and given the war in Ukraine. So we had a situation when the governments were increasing their spending, proceeding with expansionary fiscal policies. And on the other side, we also had disrupted supply chains. We had decreased inefficiencies, lockdown, sitting home, not working. So somehow we had to make up in later years for this dead weight losses, I would say. And so inflation was one of the ways, which is usually a hidden tax for this. And so I can speak for Georgia example, for instance, that for past 4 years, our cumulative inflation official one was around 45%. And unofficially, going in a shop, you could just look on the shelves and see that prices, especially on the importing products, almost doubling. And then there was a textbook response to it, right? Increasing interest rates to try to tackle this inflationary environment. And so we find ourselves now in an increasing interest rate environment. So, I can also say how it is affecting maybe the business, the relationships. It's not easy because we somehow get used to comfortable environment easily, and so we sort of forget that volatility exists. And for past several years before COVID, we have a situation when cost of funds was so low and it was so easy to discuss transactions. And what was also comforting was that there was no volatility, it was stable, it was predictable. And whenever we were discussing transaction with our partners, we could easily stick to what we would discuss, let's say, months before we would close the transaction. For past 2 years, first of all, when the rate started to rise, we didn't know where would be the end, if there was a light in the end of the tunnel. Well, hopefully and luckily today at least we see some stability. It's still early to maybe discuss surely that the rates will go down, but at least we see some signs. In many countries we see inflation is more or less tackled. So we keep the hope that we'll see some improvements in this regard.
This high interest rate environment or increased interest rate environment, together with the uncertainties around and the geopolitical crisis and the inflation, isn't this somehow putting a bit of additional obstacles for the access to finance for the final beneficiaries?
It is, I would say, because it is creating uncertainty, first of all. So we may start discussing on funding today, but then when we proceed, for instance, with a transaction, then the situation may change. So it's not so much of the increased interest rate environment, but it's the adjustment period, which is mostly hurting the business. And I think, I would say that there is certain period needed to adjust to it, and in this adjustment period, then we have a bit of, like disconnect between what we see and what the clients see from the local markets. And then there is problem in the transmission mechanism, because let's say we are forced to increase the rates, but then the question is if it can be transmitted to the end borrowers so easily. So maybe adjustment from our side is pushed more quickly than it can be then passed to the economy and to sustain the business model and adjust to this new environment so quickly. So I would say these are a bit of a hindering areas of this environment.
Benoit, you wanted to intervene?
No, just what Nino said is very meaningful. Also, maybe to remember the years before COVID were years where interest rates were very low. And I think it's probably not the rule, but the exception. And we all started to work in an environment where money was free, more or less. As impact managers, we have to deliver some returns to our investors. And typically, the years before COVID were very positive years. We could all lower prices to you, you could lower prices to your end clients. But I think it was a little bit an exception. The kind of rates we see today are the same as 8-10 years ago, and probably this is the rule. So maybe we need to adjust the business model so that they capture this, cost of money, which, as Nino mentioned, could decrease. There are some positive trends. It increased very much, but it's unlikely it will go back to what it was, pre-COVID. And I think it's important to have this in mind when we do the business planning and everything. It's just, it's probably this trend is going to be to stay for a little while, I would say, in the global markets. Yeah.
Thank you. So, on one hand, it's a trend that stays. On the other hand, there are questions to be raised about the sustainability of our business model as impact asset managers, but also about the business model of our investees, of our partner institutions. Meira, I know this is a topic very dear to your heart.
Yes, indeed. And I think Andrei was basically telling a lot about it. And now at the risk even of even repeating myself, I will highlight certain facts that are very important for us. But before I do that, maybe just to reflect also on the interest rate discussion. And to highlight what Benoit was saying, it is volatile, and we do believe that it will remain volatile for some time. So it can go up and down, but the situation that we had before COVID with basically free money, I think this is not coming back soon. So just to understand the environment and adjust the business model so they actually reflect also sustainability in that aspect. When it comes to sustainable finance or development finance, I would like to say that microfinance as a sector, as institutions, were actually pioneering social impact many years ago. So when it was when the sector started, when microfinance institutions were founded, they were about social impact. Now this is tackled maybe from more innovative angle, so it needs to be also proved, reported, and even delivered more than it was in the beginning. But in general, it is nothing new. It is now called ESG or SDG, but microfinance are quite familiar with that. ESG is about environment, is about society, is about governance. And I think all MFIs present here and those that are not present are very much aware of this importance. And in Bosnia, we have started a project with AMFI, Association of Microfinance Institutions, even before the regulator requested certain adjustments in that area to develop an ESG strategy for the sector, and on that basis also define certain KPIs that will be the guiding indicators for the institution and for the sector itself. This is now in process, and I think AMFI is quite advanced in defining these KPIs. And then, as a consequence of that, we do have MFIs, individual MFIs, that also want the support from our fund, from EFSA fund, in developing their own ESMS, in developing their own ESG strategy, their own ESG KPIs, again aligned with what we have previously or earlier done with AMFI. I think what is important also to highlight is that it is about social impact, but we see more and more MFIs into green area. So it is about energy efficiency, and it is about environment, and it is about impact of the businesses that MFIs are financing on the environment. And for example, in case of MiBospo, we have started a project on capturing Scope 1, Scope 2, and Scope 3 emissions, which is, I would say, even more advanced, and I hope my bank partners will not take this against me, but I would like to say that it is even in certain areas, it's more advanced than what certain banks have. So it's really high and heavy commitment from MiBospo. On the other hand, again, talking about environment, when we started GGF many years ago in our area, and GGF, it's a renewable energy fund, it's energy efficiency fund, and it is about big things. It's about wind parks, solar park, big corporates. But the first client, the first institution we started working from this fund was actually MFI. It was partner, again, in Bosnia. Other MFIs from Bosnia and for Kosovo also followed the example, so we do have these credit lines and these products also with other MFIs. And maybe last but not the least, I would like to highlight that ESG is new topic to many of us. It's not something that has been tested, it's starting, so it's now great momentum that we all commit to it, start learning from that, and that's why technical assistance, and this is what EFSA has and GGF has, technical assistance and technical support for MFIs to excel on that is extremely important. And yeah, so far I mentioned several projects, but there are many more to come. Actually, sustainable agri is something that I wanted to tackle later, but I want to use this opportunity. I'm sorry, so sorry. I mean, I'm getting quite excited about the topic. We also piloted that with Microfinance in Bosnia, and we do believe that other MFIs will join. And sustainable agri is not only about producing food, but producing it in a sustainable way and with the least impact to the environment again. So yeah, I'll stop here. You allow me later to talk about Article 9 and reporting, but I'll stop here. Yeah.
Excellent examples, and it is true that microfinance institutions, when you launched the GGF, I think, if I remember correctly, 2009, at that time it was not that much regulation on environment, on social, on as we call it today, ESG. So compared to the, let's call it overly regulated Basel III, CRR, whatever banking environment, for the MFIs, it was much easier to adjust and to be adaptable to the new funding lines, to the new projects in the market. However, today, if we are to speak about green and about environment, especially in Europe, we have to speak about the EU taxonomy. And we've heard yesterday that it is difficult for the SMEs to kind of report according to the EU taxonomy regulation. The same for the MFIs. And maybe we see that on the investor's side, that if an investor cannot prove the 20, 30, I don't know how much percent is dedicated to green or is dedicated to ESG, maybe they cannot attract additional funding. And if, I apologize for what I will be saying now, but if for the larger impact asset managers, one way or another, this might be, a solution might be found. For the small ones, Michal, how is this impacting Impulse and Impulse funds and your clients?
So I think that our clients are more or less common, but yes, of course, we have a different issues to tackle. So I think that I will need to mainly confirm what was already said here by Meira, by Andrei, by other people. Obviously, when we started working with microfinance in 2006, I think, with the first fund we had, Copest, there were 3 people. One in Brussels, one in Paris, one in Warsaw, and we were managing this fund, and it was a little bit, I would say, for us it was at least pioneering times. So now it would not be possible anymore to manage even a, I would say, medium-sized fund this way. Now we have an ESG department, we have an AML compliance department, and this is just, I mean, you all know this is what the trend, right? I mean, for the bigger ones, it's even more evident. And as you said, Christina, our investors. So now we work. We started working with the EIF and with the institutional investors. Now with the new fund we have, Impact EU, it is mainly funded by individual individual or private investors. And what they expect, it is a little bit linked to what was said also about the interest rates. So the interest rates going up, the market trend is, for instance, we know that the equity funds have a difficult time now to raise money. People are withdrawing from them because they can invest money at with nice returns on the fixed income market. I think that it can be a little bit similar to the situation that we have. So the answer is we really need to stress the ESG aspect. So I'm not. I think that the most important is really to have an impact on environment, to have a good social impact and a good governance. I think that, as independent of what we are saying here, right? But pragmatically speaking, our investors are asking questions about it, and so we need to be able to answer them, to measure it, to say, okay, this is the number of whatever farmer or smallholder farmers that were financed by our client here or there, or with a loan of whatever 2,000 euro or 5,000 euro or 7,000 euro, they managed to create or maintain jobs in their area. And I can confirm that this is really what is it's the first topics that come up when we try to fundraise. And Impact EU, the fund that we have now, is we are in the fundraising phase, and I have just received an email sitting here in the first row saying that there is an additional investor who joined, but the discussion with them was really about the impact. The returns are important. Of course, we need to provide some returns, but they are not coming from big big returns, of course. So this is what I wanted to say maybe about our situation.
Benoit, you took the mic.
Yes, just elaborating on what was just mentioned. I think it's very true what you said on returns. So to a certain extent, I mean, interestingly enough, I think investors, they come to impact managers not for return, they come for the topics. They come for impact, really. And for that, we need to demonstrate that there's outreach in terms of specific ESG goals. However, they do leave because of returns. That's very interesting. So it's never a discussion when they arrive. It's like, oh, of course, impact finance, we understand returns are low, but when you demonstrate low returns, and this is coming back to the first point mentioned by Nino on interest rate, we do have to demonstrate still returns because there are other asset classes that now are very profitable, and we still need to demonstrate we can bring some returns. I think on what was said on taxonomy and what is the new trends and how this sector should adapt. I think, and that's why I was mentioning at the beginning that we come every year to this conference, and with time, it's a very successful industry in this region, but in the overall regions. I think if we gather all of us, we've disbursed billions and billions to microfinance, to SME, and then with time to also energy projects, to agriculture. Some have also local currency funds. I think there's a lot of really positive things that were done. And typically at responsibility, when we have some investors, to make sure investors continue to stick with us. Because microfinance is a little, for some investors, outdated topic. They want new things. It's normal. I think they've been supporting responsibility and the industry for years on that topic. And sometimes they come and they say, what can we do, in terms of let's say, complying with the SDGs. What else can be done? And so we were approached a few years ago by the Swedish cooperation, and their topic was health. And what we said is, if we do something specifically for health, we don't have the know-how. We may fail in that topic. What we'll do is we'll structure a fund for you, which has a lot of financial inclusion, what we know, MFIs we've been financing for years that actually work a lot in terms of reducing poverty, access to financial services. And we know some of financial institutions who also provide health in their portfolio. So either they have clients who operate in the sector, they can finance hospitals as well. And also we can present to you clients who actually work only in the health environment. And so this fund that we created in 2021, 60% is, what we all do here, usual microfinance, SME. 20% is financial institutions who have a portfolio in health. And then 20% is per health project. So only health. There's an example, not from this region, but I like because the name is great. It's called Mr. Lou. So it's basically a company in Thailand. They build some facilities in the not very prosperous areas of the largest city in Asia. And in that you have toilets, you have bathroom, there's a whole system to clean the water and everything. And it's access to sanitation at a very affordable price. If we would do only this as a responsibility, or all the other managers here, I think we don't have the know-how, and we don't benefit from everything positive that was done in those 25 years here. The fact that it's blended with usual microfinance, usual SME is giving the opportunity to do this kind of project. And then to channel money from investors that are interested maybe not only to microfinance but to other topics, and they can join, and this is beneficial for everyone. And I give you the example also as well, because through this fund we finance with Mr. Lou, very successful business, and hospitals. And we didn't know how it works, and believe it, I was not surprised, but we had a default on that case. Because it's a very different business model, we had no experience in that, and yeah, so we had one successful story and one what was more challenging. So the idea here is, there is this taxonomy, there is these new requirements, we know for years, for 25 years, 30 years for some, we've been doing impact. Now we have to play smartly with the new regulation to adjust what we do, to continue to channel the fund of investors towards what we do and what we know. It's a bit of work. Meira mentioned, Michal as well, that for us we need to build up the capacity to handle the ESG, and we ask a lot to also our partners. But that's the way we will continue to channel investors' money into the project, and then we can do smartly and then say, financial inclusion is maybe less a buzzword than climate today, but it's still very important.
Absolutely, because I have to be honest, this microfinance is outdated. For me, considering the level of financial exclusion, even in Europe, I think it's a bit too strong to say, right? I don't know by heart the numbers right now, but about a quarter of European population is still at risk of poverty and risk of exclusion. And if I remember a figure from our old European program for microfinance, the EASY, Employment and Social Innovation, the guarantee instrument, from the inclusion reports we have received, 79%, if I recall correctly, of more than 150,000 micro-entrepreneurs were at their very first business loan ever. And for me, this says a lot about financial inclusion is not a buzzword. It's just something that we still need to focus on. And microfinance, or inclusive finance, as we call it at EE for the last couple of years, it is a topic for investors, and it is a topic for the funding markets as important as climate finance, in my opinion. Because, yes, we do in microfinance impact since we have been set up and since you have been set up. And probably we give a name to what we are doing today with this ESG and impact investing. But our focus should still be financial and social inclusion, right?
Yes, but responsible financial
Absolutely.
inclusion. And I think this is, I think what Benoit said, that microfinance is outdated. There is a risk of this perception being extended across the investors board. And that's why I think it's very important that we walk the talk and that we show the numbers what we are doing in microfinance, or we can call it even inclusive finance, if that makes a difference. It needs to be tackled from both sides. One is what we were discussing this morning, and this is returns. And returns and profitability is part of sustainability. So if there is no returns, then the question is also sustainability. So it's really intertwined, it's joint, and it needs to be tackled together. Speaking again of the impact that we are realizing, I would also like to mention, I know I mentioned many names today, but I really do have to, because the commitment that we see from microfinance institution is huge, and we want to be able to demonstrate that. The data, for example, with microfinance institution ECI, both of them, company and the foundation, we are now developing also reporting ESMS system, and that will be something that will show that ECI together with us is walking the talk. There is also an institution in Albania which we cherish, and it's our flag project in Albania. This is Fed Invest. Fed Invest has a special, actually bit different structure that other MFIs in Western Balkans. They can take deposits. They can do the payments. So they're really on the different level of development. but it's again about measurement. And I think next step with Fed Invest that we will be considering and doing it is about sustainable finance. And then talking about gender, besides me, Bospa, that is quite convinced to it, Alter Modus in Montenegro, definitely one of the names that is tackling this. And I would also say that our panel here is very well gender balanced, meaning women are majority. I think that's the new perspective, so we really have to emphasize on that. So yeah, all these good things we are doing on gender, on environment, on job creation, on access, responsible access to finance, is something that needs to be measured and needs to be evidenced, needs to be reported.
And then we are tackling the other, let's say, hot, very burdening topic, which is the reporting. Because each one of us has her own reporting requirements, which we know it's overburdening on you, our partners. But at the end of the day, these numbers, these reports are helping us, each one of us, to further enhance our products, right? And to further show off, probably is not the right word, but to show to our investors, to our funders, what's the impact that we are reaching in the market. Any thoughts on this?
Yep, maybe I can start a bit. So indeed, we have different approaches in terms of reporting, indeed, but maybe to explain a bit on the reason why it's so is because each of us, I think, have different technology of assessing the impact, assessing the financial performance, the credit risk, so that's why we need different formats to fit the inputs that we gather and to get the output that we want to achieve in terms of assessments. I think there is no really very available solution to it, so we most probably will continue like this, but also, as you mentioned, this data which we collect, especially on the impact side, it becomes, I can agree that it is becoming more extensive. However, I think we all mentioned here that this impact and ESG topics are still very new for us. So I think the process is like learning through doing, and it's two-way process because it's not only us, the MIVs and the investors imposing new requirements, but we also listen to the clients and we are trying to understand where are the challenges and what problems maybe these requirements are creating for them, and we are also trying to then gather this feedback and then tailor the tools which we develop to make this reporting easier. However, at the end of the day, we still need this data because I think Benoit was mentioning that we have to show these results to investors so we could enable even more funding and even more resources flowing from the developed world to the developing areas. So, yeah.
So maybe just two remarks. One is about what Benoit said. The microfinance is outdated. I think it's a perception rather than reality. But we see the same phenomenon with our investors. It's we need to microfinance is about, I think, financial inclusion. This is really what it is about, and it is very important, as Christina said, and it continues to be very important. Now the issue is a little bit the perception. I think that with the time flowing and I would say our eastern countries, getting to the EU or partnering with the EU, etc., they are perceived more and more as closer to the EU countries, and so this is something that is less maybe sensitive as a topic when you talk with the investors. So again, in a pragmatic way, we need to show these investors that yes, there is this financial inclusion, of course, but there is also the environment, there is attention to the gender balance, etc., etc. So this is something that probably helps channeling money into the sector, and we all need. I mean, all of us need it. so this was one thing, and the other thing I wanted to say is about this reporting. So obviously it's a part. I mean, as everybody said here, it's part of what we need to deliver to our investors, and so this is part of the diversity. So each of us have different investors, so they have different requirements and different topics, like the health that Benoit mentioned here. Our investors in Impact EU, they are very much interested in the environmental issues. So we are diverse, and unfortunately, this diversity goes to the reporting requirements. They are also diverse. Of course, we try to be, I would say, as user-friendly, so as I would say, simple for you as we can, but this diversity probably will remain. I think that, you know, when we had this first meeting to prepare this panel, I said, oh, maybe it would be interesting to figure out if we could not think about some kind of, you know, standardizing or uniformizing, but it looks like it is a little bit an idea maybe coming from the very old times when the communist governments tried to uniformize and, you know, make us live all under the same pattern. So probably it is not possible.
First thing, just on what I said, I'm saying from the investors, there's an feeling that microfinance, which was a bit of a buzzword some years ago, is today outdated. We don't think this at Responsibility, and I don't think this. What I was saying is microfinance has been working very well worldwide, especially in this region. So the idea is to take investors who today want other topics, climate, which is very important, but also to say, we have an expertise, all of us here, in financial inclusion in microfinance. Let's use this as a base. You want to invest 50 million, 100 million. Majority of it, 60%, 70%, would go to things we know is working. And microfinance has worked very well into making access to financial services globally and reduce poverty. This we know. So we say we have this as a base, and of course, there is your new topic, and this new topic we will add. And GGF is one. We also have GCPF as a fund on climate. 70% of the investments are for climate through financial institutions, because we know this is the proper channel. And this is reducing, this is working on 2 SDGs at the same time. This is on poverty, this is access to financial services, and this is climate as well. So just also I wanted to say that, because it's really not what I'm thinking now. Responsibility is thinking in terms of microfinance importance today. On reporting, yeah, it's not very popular what we are saying, but yeah, we collect data in a different manner, we use them in a different manner, and then this is what we sell to investors as well. Is we have rating, it's different, it's branded a bit differently, looks different. So that's a bit difficult to say we will have one platform with the same indicators. There is the group of Cerise and Social Performance Task Force that is doing a lot of work on that. Responsibility is working with them as well. It's helping, but it's very difficult to have a one entry point for all data. And so that also we share the same burden, because with the new taxonomy, and we were discussing yesterday, we also have to report a lot of new data that we are not reporting in the past. I think we all share the same trend. Our impact team was 3 people, maybe 3 years ago. I checked yesterday, today it's 12. So this is just to report things that we've been doing for 25 years. No one was asking any question. And now this new regulation, and I think it's proper, it's the new environment, but now we have 12 people internally that is just working on making the data we're collecting before in the proper format that is needed to report to the taxonomy.
Maybe just briefly, listening to Andrei's presentation, you stressed 2 SDGs, SDG 5, gender equity or equality, and SDG 8, decent work and economic growth. I think there is a lot more SDGs at microfinance, or shall we start calling it inclusive finance? I think this is a good, good point also to expand the name, because the impact is much greater than some SDGs. I think here, again, I like to give examples, and I would like to mention our partner in North Macedonia, which is Horizonti, which is covering, actually tackling a very sensitive part of the market, very sensitive and vulnerable population. We are doing financing with them, we are providing also technical assistance, and I would say that, for example, in case of Horizonti, it's not only about decent work, it's very much stress, but it's also about zero hunger. So I think it's very important that we do stress everything that microfinance, or if we decide to call it inclusive finance from now on, is doing. And the data on that, again, I'm repeating myself, but I have to, the data is a must. We need, as Benoit said, we need to report to our investors what is it that our funding and our technical assistance is doing, what kind of good is doing for the society, for the environment. And that's why we need your support to feed us with this data, so we can prove that we actually walk the talk. Thanks.
No, indeed, and if I have to, probably not the right time, but if I have to draw a conclusion out of this, is we all work together in this environment, and it's a combination of funding, advisory, partnership, reporting, data, investors. So we all should find, and I think we do, through this type of debates or through other type of encounters and networkings, I think we find a common way or a middle ground to put our efforts for the benefit of you, of the planet, of our clients, of our final beneficiaries. Conscious of time, I would open the floor for questions from the audience. Martina.
Thank you very much. Martina Grigorova from Bulgaria, Credit, also MFC Council member. So I have the following question. Having in mind this tough environment of increasing interest rates, of increasing reporting standards, you all know that all the load is taken by the MFIs. And on the other hand, we need to serve more vulnerable groups, and more vulnerable, like not only in terms of number of the vulnerable groups, but even the most vulnerable people that in general need very favorable conditions. So my question is the end of standard loan product coming? And are you envisaging some maybe blended financial instrument with grant components? Do you have the support from anywhere about such products that the market is needing? Thank you.
Maybe I can take this question just from our perspective. I think we're already doing that, because from EFSA, GGF and FIM perspective, we do blend our funding with technical assistance. And this technical assistance is not only directed to an institution, which also helps institution to build the capacities in that area, but it also can be directed to final borrowers. So, for example, now I was mentioning our sustainable agri funding and technical assistance we are doing with Microfin in Bosnia. We do provide not only to Microfin this technical assistance, but also to final borrowers of Microfin, so to farmers. We have our experts, agronomists, that go out there in the field and teach people how they can still be profitable with sustainable agriculture measures, because it's easier to get maybe, I don't know, to buy some cheap pesticide that is harmful for agriculture and then still get a profit, but that's a short term. But if you learn how to do this without the pesticide in a more sustainable way, then it's a long-term profitability for the farmers.
I'll just add a couple of words. So from Blue Orchard perspective, we also do provide thematic funds, and the idea is to provide additional solutions aside from standard loan agreements, as you mentioned. And I can bring up example of Blue Orchard's Insure Resilience Investment Fund. And the idea of the fund, just briefly put in a couple of words, is to provide the usual funding, the usual loan to the end borrowers, but also providing additional component of insurance against the natural calamities for the agriculture borrowers. So it's like a double approach for social sustainability and for inclusiveness, because it's not only about providing necessary funding, but it's also for protecting those vulnerable clients against the systemic risks. So maybe such solutions could be future, but I don't think that the standard and these plain loan agreements are also going away, because this is easy solution. Demand is huge and demand is there, and I can tell you so because, for instance, at Blue Orchard, the largest fund which we manage, it's just plain loans given to the vulnerable clients. So I think the usual product is staying, but we also have incentive to innovate and create new solutions.
Thank you very much. Yannick from Agents for Impact, thank you very much for those interesting insights. I have one question regarding ESG data quality. How's the quality that you receive of the data, and what are the challenges that you see, maybe in case that the quality is not perfect, and how can those challenges possibly be overcome? Thank you.
I think this question can be answered by each one of our panelists. I will start. Sorry, Miguel. I think we are all on a learning curve here. And we are just in the phase where we are getting this data. When we launched InvestEU 2 years ago, we started to add an ESG questionnaire as our standard due diligence material. So we are in this phase. Probably, at least on our side, the quality of the data remains to be further analyzed and to be further deep dived in. Please.
Thank you. Yes, so obviously we are, as you said, on this learning curve. I think that Isa, who is sitting here, is probably the best place to answer this question, but we work, I think, on an ongoing basis with the clients. So it's not like we send them a questionnaire, they answer, and then we aggregate the data. We review the questionnaires, we ask questions. Obviously, not all the questions are applicable to all the clients. So sometimes they try to answer approximately, sometimes they cannot answer because it's not applicable at all. And I think that it is a quite I would say long process, and it takes time, but I mean, we are learning, and we are and you are learning at the same time, and hopefully the quality of the data is better and better with the time.
I think we get high quality data because I think most of the partners we have, they track this already, so they just need to adapt to questionnaire. Sometimes we are not happy how our impact team is putting the questionnaire, so we come back to them, and but it makes more sense to the business. But yeah, I'm not too concerned about this. It's taking time, but yeah, I think the quality is there.
So I'll try to maybe answer with an example at Blue Orchard. So we are trying to measure impact of each and every transaction that we do. And given the fact that in last 2 years we revised the impact measurement tool already 4 times, I think, and because we are at the version 4 at the moment, I think it sort of reflects that we are trying to also gather feedbacks from the MFIs, and also have the tools more or less tailored to what information can be gathered. But also we are trying to push for a better quality. But overall, I can also say that we are satisfied with the quality so far. But there is always room for improvement. So, and since it is a learning curve, I think this adjustment will happen going forward.
Actually, excellent question. I think we are at the beginning. So yes, we can say we are okay and satisfied with data we are getting, but it's definitely a learning process. And I think technical assistance, again, I said that many times, and I think it's very important, is a crucial to get the right questionnaire to right businesses, because market reality needs to be reflected as well. So yeah, in general, it's a start, but it's a promising start, I would say. Thanks.
Thank you very, very much. Before closing the panel, I would want to remind you about the Slido and the evaluation questionnaire that you will get on the Slido. Please do not forget to fill in these evaluation forms. Thank you very much for bearing with us, and please a big applause for my panelists here. Thanks a lot.